Hello and welcome to a new episode of the Business of Meeting podcast. For years, we've been talking about our industry, its economic impact of over $1.3 trillion, but also the fact that many people view the meetings and event industry as a very fragmented industry, unpredictable and difficult to scale. Then recently, there has been some news that are really mind-blowing. First, Cvent announced plans to invest $1 billion over the next 3 years. Hellman and Friedman acquired Hive for approximately 1.8 billion, and Apollo acquired Questex and Emerald and have created one of the largest B2B event platform in North America with a deal, for a total of about 1.5 billion. So we already over $4.3 billion invested in the last month, or at least announced in the last month. So my question is, if some of the smartest investors in the world are literally pouring billions of dollars into our industry, what are they seeing that many small business owners might not be seeing yet? The thing is, most people think that private equity is buying event companies. Actually, they are buying predictable cash flow, valuable customer communities, and scalable business models. Private equity does not fall in love with events. They fall in love with recurrent revenue, EBITDA, market leadership, customer data, pricing power, growth opportunities, and very important, businesses that can run without the founder, which is a completely different lens. And as I always say, you don't have to sell your business, but you have to prepare your business to be sold, even if you don't want to sell it. So the other part of the equation is to understand why suddenly they're doing that. And there are obviously several reasons for that. I think the most important one and the most exciting one for all of us is that face-to-face is and will be more valuable than ever before. It's a kind of irony, but the more AI will grow, the more we will use AI, the more people will value and trust the human relationship, the face-to-face, the in real life meetings. People are still buying for people, and people will always be buying from people. And the major investors have explicitly pointed to AI making in-person interaction even more valuable, not less. So that's the first reason. The second reason is the industry is still fragmented. We have thousands of companies in our industry and very few dominant players. I would even say it's more interesting that you have some dominant players and a lot of small business. And quite frankly, it's almost a no man's land in between. But that's actually what private equity love. They love when they have few dominant players and a lot of fragmented industry. They know they can buy it, they know they can improve it, they know they can combine them, and they know they can scale them and sold and repeat. Now, if you are looking at selling your business in the future, that's obviously a great opportunity, but you need to reach a certain size. Having said that, besides the fact that face-to-face is more valuable than ever, besides the fact that our industry is still fragmented, another reason is that the technology is completely changing the industry and completely changing the margins. With AI, with automation, with better data, with better pricing, that implies as well having lower operating costs. And it's not that technology is going to replace events, but is going to make their organization faster, cheaper, more structure, and providing more data. In other words, it's going to make event businesses more profitable. So what can that mean for small business owners? Would a private equity firm buy your company today? That's a great question to ask. And yes, there is a size, minimum size, that they're not going to look under it, but there's also the people, the processes, the reputation, how long you've been in business. Does the business run without you? Or at least if you're not there, can it run for several weeks or several months without you? And so we need a small business owner to really shift our mind. Because at the end of the day, most of us, as small business owners, more as entrepreneurs, we're building income. But the private equities are buying assets, and there's a huge difference. So, what makes a business valuable? First of all, is predictable revenue, not leaving proposal to proposal, looking at long term contract, making sure that you have some sort of recurrent revenue and that you can predict for the next 2, 3 years part of your revenue. So predictable revenue is very important. The second element, which is also very important and makes a business very valuable, is the systems. As I just mentioned, could someone else run the business without you? And do you need to still approve everything? Are you, in other words, the bottleneck of your business? And I would offer that many business owners are the bottleneck of their own business. So, besides predictable revenue and systems, what obviously is extremely important is the leadership. Does the company depend on you? Have you built a great team around you? What if you're going on holidays for a quarter? Or what if, God forbid, you have a health scare? Can the business continue without you? And then also, the other aspect is the differentiation. What makes your business impossible to replace? What type of value, what type of service, what type of something completely different are you bringing that others are not bringing? And I won't go into the details in this podcast, but there's one of the sessions that I'm giving where basically I make the difference between being a professional logistical expert and being a strategic partner. And there's a huge difference. And that has obviously major impact on your business and the relationship you have with your client. So differentiation for sure. Then also you need to know your numbers. Can you explain your numbers in 5 minutes? Can you tell a potential buyer what you are measuring, how often you are measuring, see the trend in the last 3 years? Or do you just know what's on your bank account? And then, of course, the recurrent customers. If you had repeat business or if you have membership, a subscription model, long-term contract, as I just mentioned, is obviously extremely important. It's basically anything that would reduce the uncertainty of a buyer, knowing that when they buy the business from you, they will have the opportunity to look at revenue for the foreseeable future. So, what makes a business valuable? Predictable revenue, one, two, systems, three, leadership, four, differentiation, and five, financial discipline, and six, recurring customers. So, most of the people I've been talking to and been coaching the last years have told me, yeah, I'm planning to sell maybe in 5 years, maybe never. I don't know. Some say, no, I don't want to sell. Say, wonderful. One person in particular, I remember, told me, I like the way my business is, and I don't want to grow, and I want to be able to manage my time as I want. Well, guess what? The more you have a team that you can rely on, the more you can manage your business, and you're not dependent, or your clients are not dependent on you. So that's a kind of disagreement there. So even if they don't want to sell, wonderful. Many founders, and I'm one of them, don't want to sell their business. But building a business that someone would buy is the best way to build a business you'll enjoy owning. You'll definitely have more profit, better systems, less stress for sure, higher valuation, more freedom, better succession. In other words, you will have a machine that is working without you, that is bringing you joy, and where you can decide to focus your time on what you do best and where is bringing the highest value to your business. So whether you sell at that moment, it's almost secondary, but you have to build a business that is sellable. What I believe is going to happen in the next 10 years is that we're going to see a more and more consolidation. We're going to see more acquisition. We're going to see larger platform. We're definitely going to see more AI, more and greater specialization, but also higher expectations from client, which is probably no news, but it is not going to decrease. And that's where I believe in this environment that small business can absolutely thrive, but not by remaining small-minded. Those who are going to win will not necessarily be the biggest, but they will be those who are the most focused, the most disciplined, and the most valuable with the six elements that we mentioned earlier on. So my wish for you is to be able to ask yourself, if a private equity partner spent one day inside my business, would they walk away excited or worried? And that your answer will be, they will be excited. So if it's not the case now, don't be discouraged. Go to work. Any business has not been built in a few weeks or in a few months. It takes time and it's a roller coaster, as we all know, to be a business owner, but there's nothing more exciting than owning your own business. So this is not really a story about billion-dollar acquisitions. It's a story about validation. That's how I see those private equities coming into our industry. For decades, many people underestimated the meetings and event industry. Today, some of the world's largest investment firms are betting billions that face-to-face experiences, trusted communities, and scalable event businesses will become even more valuable in the AI era. The question is no longer whether our industry has value. The question is whether you are building a company that capture the value. Thank you for tuning in to the Business of Meeting podcast. I hope you found today's episode valuable. If you enjoyed the show, the most important thing you can do is leave a review and share it with your colleagues. It really helps spread the word. I truly appreciate your support. And if you're ready to take your business to the next level, don't forget to visit eventbusinessformula.com to learn more about how we are helping event business owners like you. Thanks again for listening, and I'll see you next time.